Welcome back to a brand new video on the YouTube channel. I'm GJ. If you're new, this channel is about ICT concepts explained by someone who's actually been using them for 8 years. No theory for the sake of theory. Everything I teach here is for myself, and we've already covered order blocks and a few candles and things such as on the channel. So go back and watch them videos if you are looking to get more information on those. But in today's video, we are going to get into the ICT 90-minute cycles. So first things first, what is a 90-minute cycle? The market doesn't just move randomly throughout the day. It moves in structured time-based intervals, and the core interval that ICT identified is the 90-minute cycle. So as you can see on the screen, these are our 90-minute windows, and these are what we are going to be using throughout this video. Now, here's what makes this powerful. Every single one of these cycles has the same internal structure. The same pattern repeats inside every 90-minute cycle block. Whether it's 2 a.m., 10 a.m., or 2 p.m., the pattern is the power of 3. Once you can see it, you can't unsee it. So we're going to move on to the power of 3 and understanding this on a better level. So ICT's power of 3 is a 3-phase model for how price delivers inside any given time window, and each of them have separate characteristics per window. So it applies to daily candles, weekly candles, session ranges, and yes, every 90-minute cycle. The 3 phases are accumulation, manipulation, and distribution. So let me break down each one. So in phase 1, as you can see here, we will usually have a range high and a range low. And this is the opening range of the cycle, and we will consolidate sideways. It looks boring, nothing seems to be happening. Most traders ignore this phase, or worse, they try to trade the chop and get stopped out repeatedly. So what's actually happening here is the algorithm is setting up and establishing a higher low of the range. It's identifying the liquidity that sits above and below these levels. The buy stops above the high, and then the sell stops below the low. The algorithm needs that liquidity to fuel the next move. So it waits, it consolidates, it lets the retail traders place their trades inside this stage of the cycle. And this is where we do not want to trade. So we aren't trading this first phase of each cycle over here inside our timings. Moving on to the second stage of the cycle, we have our manipulation phase. And here's where it gets interesting. And here's where most retail traders are getting destroyed. After the accumulation part of the cycle sets the range, it breaks one side of the range convincingly. It looks like a breakout. So something like this or like this, and it looks like a breakout. Retail traders then pile in for shorts, and then we will end up start trading higher after people have thought this broken structure. And then price reverses hard. Why? Because that fake breakout just grabbed all the liquidity sitting on that side of the range. The stop losses of traders who went the other way, the pending orders of breakout traders, all of it gets wiped in this one downward move to stop hunt, and then we go higher. This is the manipulation, this is the stop hunt, and it happens every single cycle, from the 30-minute to the 60-minute mark of each cycle. If you've ever been stopped out of trade like this, that was right in this direction but wrong on timing, you got caught in the manipulation phase. So moving on to phase 3, we have after the manipulation, sweep price reverses and delivers the real move. This is the distribution phase. This is where the money is made, and this is your trade. So you are going to ride the expansion and target the opposing side of the accumulation range it is formed inside of phase 1. This is the algorithm distributing price after we get this stop, and then we can find an entry somewhere here to then take out the range high, something like this. This is your trade, and this is what we are waiting for. So let's move on to our trading checklist with our 90-minute cycles. So divide the day into the 90-minute blocks. Sideways price action, high and low boundaries are clearly defined after every cycle. Daily 4-hour direction, obviously you want to be trading in a trending market. And then false breakouts at hunt stops beyond the range. So you want to be watching out for the manipulation. And then off the manipulation, we catch the higher move. Sharp rejection wick, shift in market structure. So obviously look at your candle structures. If we are forming spin tops and dojis after a big wick down to the downside for this example, then we can look for this reversal confirmation. We then enter on reversing inside of here, and then we look for longs. So we enter on the distribution phase when we have reversed and showed bullish upside in this example. We then wait to enter on the return to the manipulation level with a tight stop. And then obviously you want to be taking partials at the opposite range extreme, which is a range high. And then let's run. Usually I will leave 25% running and take off 75%. And from there, you are good to go. So this is a continuous repetition throughout each day. And we see all of the cycles inside of here. So we always only want to be trading this box here. So moving on to a real trade example today that I took on one of my Lucid funded accounts, we can jump straight into this. So we can go back to our session timings. So I did trade London session this morning inside one of my fundeds, as it is NFP, so I probably won't be trading later. I did want to just catch this nice bullish move and leave some partials running. But for now, we can look at the trade and we can go through the cycle. So when we're talking about this, we see the cycles over and over again. Okay, so this would have been our first cycle. So if we go back to our timings, our first cycle is from 12 till 1:30. So if we mark on our 12 o'clock, which is here, and then we go back and then we jot on 12:30, we have accumulation in the first 30 minutes. We then have manipulation inside our 50-minute FVG. So this could have been your entry, or we can enter on this candle within here after we see this manipulation run higher. Then final 30 minutes of this cycle takes us to one for accumulate, manipulate, distribute. And as you can see, that would have been a nice on the lower time frames, for example. So say we took on the 1 minute chart, something like this, and then see if there's any clear highs to the left. We have a nice run into our distribution of this liquidity up here. So nice 3R there in the first cycle. Now, I want you to think how powerful this is. If you know the market runs on 90-minute cycles and you know every cycle starts with accumulation, you know exactly when not to trade. You know when to sit on your hands during the ranging phase and wait for the manipulation to reveal the true direction. You stop getting chopped up, you stop chasing, you wait for the distribution phase and you enter with the algorithm instead of against it. So the 3 mistakes when it comes to this is trading the accumulation phase. I see this constantly. Traders see moving price sideways and try to scalp it. The range is there to build liquidity, not to be traded. Stay out until you see the manipulation inside of here. Mistake 2 is entering on the manipulation itself. This move will look convincing to you, and I pledge follow these cycles and see they will show you candles such as this one here when they are manipulating price, just to try and entice you into taking a short trade for this example, and then we will distribute long. And that's where you get trapped. So wait for the reversal confirmation and not the breakout. Then mistake 3 is ignoring the cycle timing. If you're halfway through a 90-minute cycle and you've missed the manipulation and distribution, let that cycle go. Do not chase it. The next cycle starts in 90 minutes. Be patient. There's always another step on the way. Patience is the most underrated skill in trading, and the cycle will repeat as it always does. 90-minute cycles, power of 3, accumulation, manipulation, distribution, repeating all day, every day, inside every single cycle. 8 years of trading, this framework is still one of the cleanest ways I know to read the market. So if you want to join the free Discord, I will leave a link in the description, completely free. If this video gave you some useful information on the timings and how to use them, drop this video a like and subscribe to the channel, and then we will carry on with these educational videos for you guys. And drop me a comment, just let me know if you've heard these 90-minute cycles before this video. I want to know, and I will see you all in the next video.